KEPSA advisor, that is the Kenya Private Sector Alliance advisor and chairman, BIDCO Africa, especially on matters the private sector achievements 20 years on. Vimal Shah, welcome to our studios.
Thank you very much for having me.
Indeed. How was your day today?
Excellent.
Excellent. Brilliant. And, 20 years is not a small feat, especially for KEPSA, if you look at it in the private sector in general. First of all, why is it important that, we look at this 20 years on? Of what significance does this 20 years mean?
I think it's important to look at the last 20 years because it's been the most transformative for private sector in Kenya. We've gone through 5 elections during the last 20 years period. And 2003, when we were sort of started off, it was the Kibaki era. And I think they wanted us to come together as private sector and speak at one level. And the transformation that the private sector has done and Kenya's robust private sector infrastructure has done has been amazing. So I think it is time to celebrate something that's been done well.
Yeah. There has been several milestones, of course, milestones over the 20 years. Could you, talk to us about the reflections on the achievements so far before you go to the downside of it? What are some of perhaps the key, notable achievements and milestones that you could think about?
So I think KEPSA as a body has overcome many challenges and really been able to bring together a lot of the private sector players. When it was formed, there were many associations at that time, and each association would talk to government very separately. So they were all siloed and they were talking independently. And there were companies also going directly to government and talking to them and lobbying for diverse interests. So if you're a trader, somebody's talking about how to reduce duties on trading products. If it was manufacturers, they would go and talk about themselves. And there was all that mixed emotion going to government. Now government would then not be able to decide, and that's when in 2003, when the Kibaki government said, look, organize yourselves, come together and be one voice as a private sector. And that's why KEPSA was born as a private sector voice, to be able to bring them together. So you got all the chamber, you got your KM, Association Manufacturers, you got Law Society, you got everybody coming together, and they're all members of KEPSA. So as an apex body, you're able to talk at highest levels. And in the last 20 years, we've been able to have dialogue. Public-private dialogue has been very important. And I think we now have very organized systems. Back then, we used to have called the Presidential Roundtable. Now it's called the Presidential Dialogue, where the President chairs, an apex meeting. Then you got the ministerial stakeholder forums at every minister level. So we have teams of people in sectors who talk to every minister, cabinet secretary right now, in that way. We've also got the Council of Governors Roundtable, where we bring the council, all the governors, and talk to them as to what issues are there. Then we've got the Chief Justice Roundtable, and then we've got the Speakers Roundtable, which means you talk to Parliament. So all these bodies. So you got the 3 arms of government, and you talk to all of them and have dialogue, because they need to know. You need to articulate. And KEPSA has been able to articulate all those issues, bring them to the fore, and talk to them. Now, this is not talking through the media and not talking through the press and trying to bash each other, but it's actually having the dialogue of understanding each other, understand what the private sector is looking at, understand what the government's looking at, and marrying those priorities. So I think that's been an achievement, and I think Kenya's private sector is probably a serious example in the rest of Africa, in the whole of Africa.
Okay, so looking at the challenges that were there in the initial beginning when KEPSA started in 2003, and now in 2024, 20 years on, when you look at the overcoming of these challenges, what has been the main drive, and what has perhaps enabled KEPSA to be able to, in all these different bodies, overcoming the economic turmoils as well, what has been the driving force to be able to overcome these challenges?
I think one of them has been very important, and that's keeping KEPSA private, which means it's not an institution where it's politicking. It's not a platform for politicians to use and then get up and springboard to other places. That's important. That's one of the things. Second thing was to bring the entire voice together and have a clearinghouse where you actually sort out. Within private sector, you have differing views, you have different ideas, and you remove all those conflicts of interest. You remove conflicting ideas and come up with one voice. in terms of marrying what's good for the government, what's good for the country, what's good for our people, and what's good for private sector, and marrying that together. And that was quite important. Otherwise, if two people, three people in private sector are fighting, they tell the government to do it differently, and the government will listen to one and not to the others. And that created a lot of disparity. So now it's organized, it's there, we have a voice, and it's not done in terms of fighting. So like I said earlier, we are looking at it from an organized point of view and understanding each other. Devolution happened during this period.
Yeah.
The constitution changed, 2010, happened during this period. So 2003 to now, in 2010, we had this new constitution. In fact, the whole economic manifesto, KEPSA was very instrumental in putting out manifestos in every elections. And we have that manifesto where a lot of things are picked up by the parties, all the parties, not just one party, but all parties. And then, of course, we've had this whole discussion around peaceful elections. 2007, 2008, when we had an issue with post-election violence. Thereafter, KEPSA came up together and said, fine, let's do this in Kenya Daima. And Kenya Daima then brought out 3 more elections, and we've had peaceful coexistence of people to say, fine, understand where we're going. So all those issues, again, there's a foundation which looks after the whole social element of it, creating employment, including the Ajira program, which is now looking at digital enablers. So there's been a lot of new things that have come through. And also, I think it also becomes a house where all the new investors who come to Kenya would actually go and talk to KEPSA and say, fine, what do you think? What's the landscape like? So they get a feel of the place. And in that manner, it's been a clearinghouse for a lot of those people.
And talking about landscapes, Vimal, there is the issue of, the private sector companies, quote unquote, closing down. There's been that conversation. How is the lay of the land looking like, especially for the private sector, in terms of companies and businesses that have complained of the taxes, especially under this administration? How is it?
So I think if you talk about current, and if you talk about this current phase of last 1 or 2 years, I think we've taken a slow down in terms of we've taken a backseat from government side. And I think this is important to talk, and KEPSA is able to speak truth to power.
Yes.
And say, look, this is the reality. It's not about accusing or pointing fingers at each other. It's about bringing out issues. The issue of competitiveness is key. If we are going to be looking at the whole opportunity of East African community, we're going to look at the new opportunity for the TFTA, which has been signed and ratified. We've got the ACFTA, which is the African Continental Free Trade Area. I think it's going to be key that we have local value addition here in Africa, in Kenya. And with that, we need to make that competitive. And I think with what's happening in the scenario right now, it's become much more of taxation, whereby you are actually taxing and making us uncompetitive in Kenya. And therefore, we will still consume. Look, all our consumers in Kenya, every one of them, 55 or 60 million today, they will still consume. The question is, will they consume local product or will they consume products from outside, including services, not only goods, but also services. Will we produce locally or will we get it from outside? Same thing, competitiveness is the key. And what's the taxation that's coming on is taxing raw materials, it's taxing inputs, it's taxing labor, and therefore our cost of doing business, our cost of manufacturing is going up. And therefore our relative, and I talk about relative competitiveness with all our regional markets from East Africa is being eroded. And that's a key concern for a lot of people. Number two, our pockets are being invaded in a way, salaries are being invaded, and therefore you can see the salaries shrinking. Now, if the only remedy or cure for that is increase the entire salary package, salary wage rate. So there's a wage price spiral. You increase that, you increase the costs. Cost of goods go up, again wages go up. So there's a spiral there, and we need to make sure we become competitive. That's a key challenge today, and I think this is where we need to talk. And we need to speak, and we need to be listened to as private sector, as KEPSA, to say this is what the reality is. It may be good for right now to say, oh, we collected a lot of tax, but in the long run, you're actually eroding competitiveness. Hence, you've seen a lot of the multinationals are actually saying, back up and move elsewhere. We've also got COMESA. I don't know if you know about COMESA, but COMESA, and we got free trade area under COMESA today. East African community is a community, right? But the free trade area from Egypt is far more competitive today. So there you can get your products produced and bring it into Kenya duty-free, tax-free. Whereas we are taxing all our raw materials and inputs. And that's what uncompetitiveness is about.
So are the players that ought to listening to KEPSA and these concerns that you've raised? Is there a multifaceted approach in terms of trying to address these issues and these concerns?
Yes, there is dialogue going on. But I think there is a lot of willingness from government side too. But the actions are not there. I think this thing is right now, we need to curb this right now. And therefore, we need to speak to everyone, including Parliament. Right? We can't have a parliament that just says, put a tax here, put a levy here, and we'll milk the cow. The cow will stop milking, will stop giving you any milk.
Okay, so then when you look at the future and how things are right now, do you think it is encouraging competitiveness and ideas, or are the Kenyan manufacturers, the Kenyan private sector saying, okay, we will hold and see how it goes, then we can either release or decide to be innovative, or we wait and see how things go forward? Is it a situation of, are we stagnant, are we progressing, are we stalling?
Well, it's called work in progress right now, because this dialogue is continuous. It's not like one-off, you talk and you get out of it. It's continuous. And right now the issue would be that we need to salvage the situation very quickly. Because if we let it go into 2025 and 2026, when companies have decided at the boardroom level to say, fine, no more, not manufacturing in Kenya, not doing anything in Kenya, and they go to neighboring countries or other places, we will still be sold to. We will still be a market. They'll still be trading with us. But the question is whether we're making it here or not. Value addition is a big thing. I think government's policy is clear. If you look at the manifestos and the policy, government's policy, we want to have local manufacturing, right? KAM came out with a proposal to say we want 20% of GDP coming out from manufacturing locally, right? We want to have local jobs because we need to create more jobs locally. So the government's manifesto and its policy and philosophy is still for local value addition, right? It's for less taxing because we can pay our debts. The point is, if we keep taxing heavily and we lose jobs, the ultimate tax we collect will be lower. And therefore, widen the tax base, but make it lower, so it's affordable. And in that manner, same manner, the wages also will need to go up and the tax will be lesser. So that way you'll collect more. So I guess there's also one more thing. It's about making sure that everybody pays what is due. And that's where the whole issue will come of saying, are we seriously corrupt? Are we seriously not corrupt?
Not corrupt. As chairman of BIDCO Africa, of course, your company has grown in leaps and bounds. From a personal perspective, what are some of the insights that you can share, especially in the last 2 years, heading into the third year, especially under this administration, when you compare with the other previous administrations and governments?
I think the fact that there is a lot of local manufacturing happening here, we've got a lot of overcapacity in Kenya for a lot of manufacturing. Government needs to realize that there is local value addition happening here and there is local production happening here. We need to make sure we become competitive to the whole of East Africa, and then the TFTA, which is, TFTA includes SADC, COMESA, and EAC. And in that context, we need to make sure that we are competitive here. And then in the ACFTA, we need to make sure that we are competitive to sell to all of them. So therefore, the cost of doing business, the cost of everything else needs to come down, right? Government is a 30% shareholder of every single company. Talk about taxation. When you make profit, there's a 30% tax you have to pay. You can't avoid it, except they're not a shareholder with you when you make losses, right? But therefore, government needs to say, how do I make these companies become bigger, better? Small, medium enterprises, we have a big focus in KEPSA on the small MSMEs, right? To make them bigger. Right now, MSMEs are struggling, and therefore they can't even start up. For a startup industry in Kenya or a startup project, it takes you 300,000 shillings just to get licenses, right? They don't add value to the company, but they just have to get those licenses. We need to move away, and I think this is important for all the leaders and politicians to understand. We need to move away from a license Raj. License Raj means what the British gave us, that you keep people out of business, so therefore you keep licensing. And if you keep licensing every single person to say, fine, produce, what are you licensing? We're a free country. We got freedom 60 years ago, 61 years ago, and therefore we need to make sure that we don't get into this licensing possibility. Right now, everything needs a license. Licensing for what? number one. Number two, we're digitizing. And I think that's amazing that we're digitizing the economy.
Yeah.
But when you digitize something, right? You run a digital studio also.
Yes, yes.
When you digitize something, the cost becomes near zero. An email doesn't cost you any money. Therefore, why should we be having taxing or charges on every single thing we do digitally? We should have no charges. We've got to learn from a place like India, where they've got something called Digital Public Infrastructure, DPI. If you Google that, you find out they give you all these services free of cost.
Okay.
Right? Because digitally, it becomes free. Now it makes the small, medium enterprises so much more productive, so much more better off. And that's what we need to do here.
And we are a country that we are, of course, churning out young people. They're full of ideas. Vimal, does it mean then that they have no place to take these ideas because of all these issues that are currently ongoing?
I wouldn't say everything is lost.
Okay.
I think we've got amazing human capital, and I think they've got amazing ideas. We just need to nurture them. It's like planting a tree, right? You put a seedling there, you got to nurture it, you got to give the right fertilizer, and it's not lost yet. I think we can still do it, we can salvage it. The first thing is the will is there. In terms of the government, the country, the manifesto, the will is there. It's written out, right? All we need to now is align our actions towards the will to say, fine, now our actions are going to be pro-business, pro-improving local production or local ideas, whether it's digital or whatever, and really generate a lot more jobs. In fact, we can do wonders for the whole of East Africa.
Okay. Looking at the young people especially, because they're the ones who sent the questions earlier on regarding starting up something, and availability to capital has really been, and availability to credit has been a conversation that has been ongoing, and it's not very easy, especially with the current situation with banks. There's a lot that comes to being able to be given credit or capital to start off. What would be some of the other alternatives you would imagine in the current and modern day types of businesses post-COVID in the era of technology as well?
I think it's become a big issue of access to finance. And I think access to finance for a lot of young startups or small startups has been very difficult. It used to be like that in agriculture, where agriculture was seen as so risky that weather, climate, all that stuff, so agriculture never got funding. Now the startups are facing the same problem. And this is where we need to be unique in terms of how we get them to fund. Whether it's crowdfunding, crowdsourcing, or it's equity, right? We have to have new equity models where they can get funding. However, there's one more thing that our youngsters need to do is articulate their pitch in a much better manner. Articulate what they need, what they want. And I think it's establishing trust. So once trust is established, people will start saying, okay, I can do that too. I was speaking to the CEO of Stock Exchange here, and they can start doing that too, because a lot of people go to them and say, where do I put my money? And they put them in the number of limited stocks we have in the stock market. This could go to our youngsters, but it needs to become bankable. And those project proposals are still not fully bankable. And I think this is where we need to show them how to pitch, how to make it better, and give it out.
Okay.
There's a lot of young startups that are being given a lot of money by smaller people all across the world. Why not here? Right? It can be done here. It can be incubated. But I think the articulation, I would say, from the startup side, they need to really articulate, have a customer there, see what the need is, and make it happen.
Okay.
If you talk to people who do venture capital in America, angel funding is a startup, right? And they do startup funding. Out of 100 people they finance, probably 90 of them fail. 10 of them succeed and become like your WhatsApp or Facebook. And that's what happens ultimately. So that's where we need to really have an incentive for that. We don't have that incentive in Kenya.
No, don't have. So looking at, with the advent of global economic uncertainty sometimes and, inflation issues, we've seen the last year aggravated wars here and there, global tectonic plates are shifting. How can then the Private Sector Alliance, KEPSA, and the private sector in general in Kenya adapt to this, having seen how things have been, not only even in the last 3 years, perhaps even in the last 20 years?
I'd put it this way. I think Kenyan companies under KEPSA and all the 1 or 2 million businesses who are engaged with that are quite agile, are quite adaptable. And what we need to do is navigate the turf well. And that's where KEPSA comes in to say, fine, help you navigate the turf. Number one. Number two, we're in a VUCA world. VUCA is volatility, is the uncertainty is a given, right? Complexity is also given, and ambiguity is also given. In those territories of VUCA world, we've got to make sure we show them how to adjust their sales and still move forward. Whether you got headwinds or tailwinds, you still got to adjust your sales and therefore say, how do I become agile? And sometimes if you got a product that doesn't work, fail fast, but learn fast from it. And I think get onto it, because otherwise you sit with a paradigm that people will still come and buy from my shop or Duka, where they're now going to a device. You got to change. So you got to change and say morph into that. We can do that. It's not always doom and gloom that it's only taxation or it's only this or that. But I think the issue is about being innovative. And our people are quite innovative. However, again, around that area, I would urge government, we have no incentives for a lot of startups in digital space. We need to look at an incentive package. We can do that for them. We're going ahead and giving a lot of FDI, foreign direct investment, and we give them tax exemptions or this or that. Why not do it for our startups? In fact, get them to start saying they should have a 20 or 30 million shilling turnover, and thereafter you start taxing them. If we gave them that leeway and we say, fine, no licenses until you become a certain size, of course they got to comply with quality standards. But at the same time, if they came up, we'd have a seriously booming country.
Absolutely. Vimal, let's take a quick commercial break as we ruminate and think about what you're talking about, especially on KEPSA 20 years on. You're watching the Daily Report. When we come back, we conclude on that conversation, even as we look at what lies on the other side. Mheshimiwa Gigi Kagombe is also in the building. Do stay with us, much more coming your way.